Open Orphan, here we go. Our first company tonight is Open Orphan, the rapidly growing pharmaceutical services company, which is a world leader in the testing of vaccines and antivirals through the use of challenge trials. ORF has a market capitalization of around £110 million, and Executive Chairman Cathal Friel joins us from Dublin to talk us through the latest contract wins and underlying strategy. Over to you, Cathal.
Donald, it's a pleasure. Thank you for having me on tonight. So I presume the first thing I should do is share my screen, shall I? Is that the plan?
That's a good idea.
Okay, let's get the presentation. There we go. View full screen. There we go.
It's looking good, Cathal.
Is that clear on your screen, Donald?
Yeah, it's clear on my screen. I'm loving it.
Okay, well listen, thank you for having me on, and I'll bring people through this presentation, but rather than laboriously, I'll touch the high points, maybe starting with this slide. Look, the management team. Basically, the only two new faces here are myself and my colleague Leo Toole. Basically, we brought over two companies, two struggling name companies, one Venn Life Science, we acquired that June last year, and then hVivo end of January this year. And look, there's no rocket science what we're doing. These are struggling companies. They've never made profit in their lives. They have bloody good revenues, and even better, they had fantastic staff. Andrew Catchpole, there for 14 years, our Chief Scientific Officer, Martin Johnson, Senior Medical Officer, Adam French. And really all we've done, we removed, let's say, two CEOs, two COOs, and two CFOs, and freed up the real staff, the long-serving, what we call long-suffering people, to run the business, with myself and Leo as very hands-on executive chairman, which really means CEO, and to Leo minding the money. So look, we're in good shape. We were lucky. We acquired what was the world leader in the testing of vaccines and antivirals at the end of January. The world didn't want to know about that then. However, 2-3 months later, it got much more interesting to be the world leader in that fast-moving niche. Look, what we are, you've rightly said, Donald, we're a fast-growing niche pharma services player. So rather than getting into that, what is it? We basically test vaccines and antivirals. How do we do it? Mainly the two companies, the main one, and we're keeping the branding, we keep the logos, we keep the emails, is hVivo, based in East London. It's been doing this for close to 30 years. Prior Coronation was called Retroscreen. And before that, some of the staff went back as far as the old 1947 Salisbury Flu Clinic. A lot of history. And look, basically, we test vaccines and antivirals. So that's a pretty interesting space to be in the current market. We've also Venn, fits like a glove together because it does preclinical and it provides our data management, biostats, and medical writing as part of the hVivo offerings. This kind of summarized really where we are. Look, this time last year, our market cap wasn't that much more than 15 million. And guess what? At the end of June this year, we've 15 million cash in the bank. I know people will say, right, interims are due out tomorrow morning. So let's dwell a little bit on that. This year is a year of two halves. The interims are not going to blow the lights off, or as they say in the French connection, blow the doors off. But the first half was integrating, putting it together. And all I can say is that we said we make it profitable. Q4, we're absolutely going to be profitable this year. Okay, we could have been profitable in Q3. We took a risk and spent some money on being the only party in the world doing COVID human challenge studies. And there was a bit of a leak in the media in the last week saying we're nearly there. We're getting pretty close. It's a bit like driving the car, Daddy, are we nearly there? We're very nearly there. There will be an announcement, hopefully, very soon as regards that. But all I'm saying is that, look, the cash is growing. And by Q4, we're very much on target to be profitable. And that cash balance, the 20th of June, at the end of our first half, will be very substantially bigger by the year end. And let's see how big that's going to be. Say the year is going to be a year of two halves. And basically the first half was integration, putting it together. Bear in mind, we took over hVivo. It had no contracts. It had just landed up in the rocks. We're good. What are we good at? Signing contracts and getting it going. And really the staff are delivering them. So we've had a very good first half of the year. And now we're 3 months into the second half of the year. And I think we'll come to that in a minute. We've been signing lots of contracts. They're highly cash generative because our contracts, the human challenge study contracts, we get 25 to 30% cash up front. We signed a contract on Monday this week for 4.3 million. Guess what? 30% of cash comes in with that. That's 1.2 million. We signed the 4 million one last month with Pfizer. And again, 1.5 million cash comes. So yeah, look, it's a nice business, and I don't want to dwell too much on it. We're in good shape. Myself and my co-founder still 19%. We're locked up for 3 years. That's 1 year done. 2 more years to go. And with Invesco at 7.88. We raised 12 million at the end of May, massively oversubscribed. Some of those shareholders are all institutions that have been top sliced a little bit, taking some off the table. Institutions tend to do that. If they can get a quick 30%, naturally, they're going to take it. But a lot of them are sitting and holding tight, so to see what we develop in the year ahead. Look, not going to dwell too much in this other than look, for anybody who looks at, we've had a lot of announcements, almost a 4 million contract every month now for several months in a row. The main thing that we're guiding on the announcement yesterday morning, and this is what people want to hear, is that we have this East London facility. It has never been more than 20-25% full in the past, ever. And so we inherited it, or we acquired it in January, when it basically had no contracts. It basically had finished a large Merck study, and guess what, in February, there was nothing coming through. But we very quickly signed contracts, and in yesterday's announcement, we said we're now block booked out for the first time, 12 months. And within a month, we hope to have that facility booked out solid to the end of next year. That's a hell of a turnaround. Now, is that us being lucky? Is it the pandemic helping us? It's a combination, but very importantly, it's been getting deals done and making it happen. And our deals do convert to cash very quickly then. They're all 3 to 6 months deals. So that's a cash generative business. I'm not going to dwell on this. Look, basically, we see we do a lot. And to be perfectly honest with you, it's a year of two halves. We've done everything. We've transformed the business. It will be profitable in Q4. And we are now the world leader in the test of vaccines and antivirals. So a nice place to be. I'm not going to bore people. I think there's a lot of press. And the editorial in FT on Saturday, I was very proud. That editorial said the British government's going to be doing human challenge studies. I think of myself, my colleague, Andrew Catchpole didn't say on the 7th of March we were going to drive human challenge studies. I don't think the editorial would have been there. I don't think the British government would have found anybody to do it, only for HVIVO. And the beauty about challenge studies, you can really speed up the testing of vaccines. Vaccines involve big, tens of thousands phase 3 studies. A human challenge study involves 50 people, of which everyone gets infected with whatever the virus is, and you can guarantee whether that vaccine's effective or not in a very short period of time. So more of that. Basically, this deck is straight from a website, so people who want to read more about challenge study models, it's all there. Lab services, again, HVIVO have this fantastic lab, and really what we've done there, we've reached out, and now we're getting lots of lab assay, lab services work. And everybody's wondering, how's COVID-19 antibody testing? Well, we're doing both antibody testing and we're doing PCR testing. So yeah, that's rolling out nicely. In the first half of the year, we only got the kit in May, installed in June. So in the interims, there is no testing. But the second half of the year, that is going rather nicely. But I say the big focus is on these monster contracts. And we're looking to have our challenge study unit booked out 2 years in advance. But everything else, there's laboratory services, complements it really well, high margin. The antibody testing works really well. And the PCR testing works really well. So it fits together like a wonderful jigsaw at the moment. Again, we were building an open Orphan, the genomic health database. Now we're basically, with HVIVO, with the world's largest infectious disease progression database. So we're merging that and integrating that with our health data platform. And you'll see in here lots more of that. The big part of that, we have been approached. We didn't go to them. So again, is that lucky? We didn't actually think about it, but they came to us. A number of the big wearables have come and said, can we get access to your infectious disease data? We said, we'll be announcing one way or another, hopefully before Christmas, some transactions dealing with the large wearable companies in the world. Because if we have that database built up over a long period in time, most of that data is in freezers up in our biobank in Eli, with tens of thousands of samples come back a long time. So that is something we're sitting on and we will capitalize upon. Leo, during our interim announcement tomorrow morning, we'll talk through. We've broken well through this operational leverage. We've taken out a lot of the overheads, and guess what? We put an awful lot more revenue in. So problem with hVivo, the problem with Venn before, they just weren't, the overheads were too high, the revenue is too low. And I think it's clear from all our announcements in recent days and weeks, we've sorted both. And say we've a habit of losing CEOs, losing COOs, losing CFOs, I believe. They always say too many chiefs and not enough Indians. That's the problem with these businesses. So a lot of the chiefs have departed on good terms. We're good at moving people on in a gentlemanly manner. And we've allowed the Indians now to, let's say, take flight and drive this business as they should. I'm not going to bore people, lots of contract wins. Anybody looks at RNS, we're doing an awful lot of them. And we're very lucky, but if you haven't contract wins, you basically haven't a business. So we're making it really clear that you have to focus on contracts. And if you'd ask me what goes wrong with I've been a prolific investor in small AIM companies for years, and some have worked well, some haven't worked so well. I think the recurring theme, what goes wrong, I think management team come in and think it's their company. A former company I formed, the CEO told me, this is my company. And I said, no, Joe, this is the public's company. So it's a learning process for a lot of the management team. And so to make clear to all our staff, we put our salaries up on the website under Open Orphan investor section, corporate governance. You'll see my salary. I'm in a very reasonable salary, 40,000 pounds a year, no pension, no funnies, and a 25% bonus. My colleague, Donald executive director, Leo Toole, is the same package. He's a small bit of a pension contribution. I'm older, I'm 55. My pension should be sorted at this stage. So we want to be very open. All the other directors' remunerations is there. So I think, look, as regards contract wins, we're focused on those, but really we're focusing also on managing that overhead, that people don't go wild and thinking it's our company, it's our shareholders' company. This pipeline, I think anybody who doubted it, it's materializing. And all I'd say is there's a year, 2 halves. The first half, getting it together, and the second half, there's an awful lot more to come. So we're guiding the market. We'd like to see our facility full for all of next year and the rest of this year. And when we land the large COVID trials, we will be making use of an alternate facility. So all going well, we'll be running 2 quarantine facilities very soon. Global awareness, look, the world didn't know, and being honest, this time last year, I had to Google what is a human challenge study model when we were looking at hVivo. That's how bad it was. Now, I think I talk about it. I talk to a lot of customers, I sell a lot. But even the world has woken up this time last year. My kids, I have an 8-year-old, 10-year-old, and a 12-year-old, didn't know what a vaccine or antiviral is. And a year later, the little devils seem to know all about, as most kids do. They know what a vaccine are and they know what an antiviral is. So look, it's a good space to be in. We have a very solid business now. There's nothing to do with COVID. I keep saying we're very lucky. We're kind of COVID central, but really importantly, Open Orphan has a non-COVID business. All of the contracts announced this year so far, bar one, was non-COVID. We have lots more contracts coming through, non-COVID. So we've got 2 businesses. If COVID disappeared, as we all would hope to do tomorrow, we still have a really nice human challenge model that's going to continue growing and growing, because we're entering the decade now of vaccine development. We've had a decade or 2 of oncology. This is a decade of vaccine development. And to develop vaccines, you need human challenge study models. In conclusion, we're a niche, fast growing, and we are going to be profitable in Q4. We have a very high margin. There's no good being a world leader in something if you don't charge good margins. We have a broad customer base. We have great growth opportunities, and we have lab services to capitalize upon everything that's going on. That's the shareholder price. Look, it's a bit out of date, but that's where we are. Most of the founders were all locked up for 36 months, 2 years to go. And let me bring you to the last thing I'd like to say. I'll hand over to Donald for Q&A. Look, we have some non-core assets. Look, we're very much now, I think we've got the business fixed. It's firing on all 4 cylinders. We've a really motivated, people thought you couldn't take out. We got rid of 4 of the 6 Venn offices. We got rid of most of the entire management team. And guess what? The Venn staff have never been working harder and writing new contracts and doing business. Likewise, for the team in London, they're doing fabulous work. We have a couple of non-core assets, particularly Immutex, and we've said so often, we've set a target between them. We're big in the targets to Christmas to monetize Immutex. That'll either we'll sell it or we'll reverse it into another vehicle. But it means between now and Christmas, the shareholders are going to get something for the stake they own. It's not ours. in that one. And we've got the repurposed immune modulator and prep pharma to work on as well. In addition, we've made clearly to a large wearables transaction, and then we roll into next year. So I think, Donald, that kind of summarizes, hopefully I didn't go too fast, a whistle-top tour of where we've got. Somebody said there's a year of two halves, a lot done and a lot more to do between now and Christmas.
Thank you, Cathal. That was fantastic as ever. We've got lots of questions. Stephen Ratcliffe and AF Ajemi, both asking about progress with the government contract, which has been seen in the press. You touched on it. So where are you with Boris?
Government contracts, I think, as well. Somebody somewhere leaked it last week. It wasn't us, despite the fact our name featured prominently in most of the business papers around the world last week. But look, I think the best thing we do is we did a leak announcement, holding statement that said, look, we are in advanced negotiations, not just with the government, but with pharma companies for the development of a COVID-19 challenge study trials. We did say on the 7th of March, we were going to do it. I did say on the 7th of March, I was going to be volunteer number one. And I know I frightened you earlier, Donald. I think my wife is delighted. But look, human challenge studies, they're interesting, is the way I put them. For me to get the team behind us and to get our shareholders, and particularly get our board, they say, Cathal, is that not dangerous? I said, well, no, I've looked at it. I'm happy to be a volunteer. I gather the ethics panels, the medics won't let me do it. I'm 55. You've the 18 to 55 to do a normal challenge study. I think the view is the current COVID-19 one will be 18 to 24-year-olds, 18 to 26-year-olds, where the chances of an adverse reaction is very, very minimal. But I keep saying I remain within the company a willing and able volunteer number one to do the COVID, because I think this is something, look, we're in a pandemic and everybody's got to do their bit. And human challenge studies will speed up the development of vaccine. It's easy producing the vaccine, but somebody somewhere's got to test it. And
you did say that your wife was quite keen that you did it.
Yeah, I think it's a joys of having young kids and a young wife. Maybe she might think, pop the old boy off. But my view is there's no chance as part of a challenge study, the old boy going anywhere. Okay. I believe it's actually, look, I run it. Look, it's actually my view.
There's a serious question here though. Your 24-bed facility is close to capacity. In fact, you're reveling in the fact that it's full for the next year or two. So how do you expand that capacity?
Look, it's unique. It's a 24-bed one. I think we're indicating that if we have an announcement in the very near future to do COVID-19, we will probably have access to an alternate facility. That's all we can say. The COVID-19, because we're booked up for almost a year, going on 18 months in advance, we've no room in there, which is a good place to be. But I think we're advanced discussions. And anybody who scanned the press carefully last week, the name was mentioned, but I don't think I should say it. We're in advanced discussions of getting use of an alternate facility. It wasn't used before for challenge studies, but it's appropriate. It is a negative air pressure quarantine facility within the Greater London area. That's all I can say.
So it's actually not proving as hard as you might have thought to get a new quarantine facility.
Well, it's not the new quarantine facility. The issue with challenge studies is you've got to manufacture the challenge virus, recruit the volunteers, do the characterization study. So having the facility is only one part of almost like a hand, one finger of the hand. You've got to find the other four fingers. So the four fingers is what we have. So yeah, so look, I'd imagine going in next year, we'll be running two facilities.
Grand. Now, Sukman Gruel asks a very interesting question. I think to sum it up, I think he says, are there barriers to entry with these quarantine facilities, or can lots of other people actually develop them as well?
Look, if you look at I flicked over in the deck, but look, the barriers to entry doing a challenge study, first you have to have a quarantine facility. We have one, East London. There is one other in the Greater London area. There's not an obvious one that's rarely been used. It's never been used for challenge studies. But the barriers to entry is not a lot of people will build a bespoke facility. That's barrier one. Barrier two, you've got to develop the challenge virus and the challenge study model, first of all. And we've said we've 25 million investment in challenge study models. We inherited it from the previous management team and the previous shareholders. But the bigger, tricky one, then you've got, look, put as challenge studies, loads of academics through the world do them. Academic universities have been lots of them done, but they do them in a small way, 5, 10, 15 people. they can't recruit. It's sometimes a screening for an influenza, our influenza challenge study. It's for every 250 volunteers we draw blood from that we screen, we get one to fit the challenge. So we've got a low cost, high throughput way of screening volunteers, getting loads of them through that no other facility in the world was able to replicate. And more importantly, we can run the challenge study, we can test the vaccines and produce the result on time that big pharma wants. So look, there's no rocket science. Lots of academics around the world, even here in the UK, lots of academics have run small challenge studies, but nobody can scale it up. It's one of these things, it's a bit of science, it's a bit of art, it's a bit of experience. And really importantly, we've a long history, 35 years of never having an adverse reaction. So if it's a British government, or if it's Pfizer, or if it's GSK, or whoever wants to run a challenge, the big thing, oh, have you ever had an adverse reaction? The last thing you want to do when you're testing a virus is for anybody to get sick. And that's where I'm so happy and confident being volunteer number one. We've never in 30 years had anybody even to get remotely sick within the HVAC facility. That's a pretty safe place to be.
Okay, I have a random bag of questions now. We've lost our flow, but nevertheless, they're interesting questions. And John Cardozi asks, do you have any plans to list ORF on NASDAQ?
We've made clear in that last slide I did, look, we're dual strategy. Look, again, you can't depend on one. It's a bit like closing deals. One option is to reverse it into a NASDAQ SPAC. That's a special acquisition vehicle. The better option could be just sell it. There are 51% shareholders of Seek Group. I think they've been long suffering. They're in 10, 12 years. They've seen nothing for the money. If we can't do something with 2 vaccines in the current environment, we should be shot. So look, we've given ourselves to Christmas to monetize that asset. We have to run multiple strategies. One is reverse into NASDAQ. The best one, my view, would be to get cash. I call it folding stuff and hand that back to shareholders. I made clear recently, there is no more fundraising in this company. The fundraising is over. We have 14 or 15 million at the end of June on that slide deck. And I made clear by Christmas, we're going to have an awful lot more than that because we're generating cash. We're getting big upfronts. So the next transaction will be handing cash back to shareholders. That'll be a dividend, but more importantly, that'll be handing the monetization of Immutex back between now and Christmas, hopefully.
So what would your time frame be for exiting the business?
Don't like talking about exits anymore. I put the business together, I said a year ago, if we could get it to 60 or 70 million market cap, we'd sell it for 100. I think if somebody came and offered 100 today, nobody listening tonight would sell for 100 for a market cap. Look, I think the big one is we're guiding the market. Can we grow the share price by 50% every 6 months? And can we double it every year? If we can do that every year, it negates the necessity for people wanting to sell. And we also want to keep high daily liquidity, and that's where I do a lot of investor engagement. So we keep growing the share price by 50% every 6 months, doubling it every 12 months. That's not a bad start.
Okay, let me quickly spin back to this. Oh, here we go. Andrew Bain, when should we expect an update from you on the sale or monetization of Immutex? There you go, you're just nodding to that.
Yeah, so just said the update in Immutex is we've had it. We've given ourselves a target of Christmas. We will sell it or list it between now and Christmas. The shares, whatever we get, will be dividend species to all Open Orphan shareholders, because at the moment, I call it a stranded asset. It's trapped on our balance sheet, 49% of something they can't get hands on. So we've given ourselves till Christmas to deliver the results in that regards.
Okay, you've got so many exciting things going on that sometimes I think the genomic health database gets a wee bit forgotten about. But have you, Dave G says, have you offered that to the government because they want to be a global leader in genomics?
I think the bigger, we're still growing that, but what we said in my slide earlier, we already have the world's largest database of infectious disease progression. What does that mean? We have the world's largest database of what happens when a virus is put into the human body. That's all sitting in freezers. I was up there last week in Ely. It's an hour and a half north of London, in a whole series of freezers, tens of thousands of samples. So we're taking that. So rather than spend hard yards trying to completely build the genomic database, we have the platform. We're going to supplement it with the world's largest database of disease progression data. And that is what the wearable people are after, because then in 6 months' time, your Apple or those little phones can tell you, beep, beep, we think you might have X, we think you might have influenza, we think you might have COVID, you need to go to the doctor. So that's where we've brought the genomics. So it's basically we've pivoted, let's say, more to the infectious diseases. We haven't left the genomics because that's still really important. I think we've all seen the government now is focused on genomics. Anything we do, we're a British company, we want to do in partnership with the British government. So I think it's really, really important. Partnership is the word of the game in our business. We're a small little company, we're growing very fast, and we want to share what we have with everybody and anybody, but at a price. We'll have to get paid for anything we have. We don't give anything away for free.
Okay. And this one follows on from Stephen Ratcliffe again. Are any wearable companies submitting bids for your data yet?
We've only brought this up in recent weeks. I said between now and Christmas. So again, we're a public company, we couldn't answer that. All to say, we've given ourselves the run between now and Christmas to, let's say, announce a deal. So that's set ourselves a reasonable hurdle.
Okay, so work in progress on that one.
Absolutely.
Okay, a question from me. You've signed up so many contracts. Might it be worth taking breath and consolidating all those contracts for us? Talk us through the contracts, how much money in broad terms, but also tell us the margin that you would expect to make on those contracts, and refer it back to the company as it was. And are you more profitable or less profitable in the business that you do these days?
First of all, bear in mind the business never did more than 25% utilization in the past. We're now at 100% and we'll drive the 100% for the next year. That's step one. Look, bear in mind when the interims come out tomorrow, we inherited two heavily loss-making businesses that never made a profit. Venn never made a profit. HV never made a profit ever in their life. We're now seeing the integration of the two of them. We will be profitable in Q4. That's step one. The way we've done that, we've taken the overheads out and we've increased the revenues. But yeah, on the interims tomorrow, I think we'll go through a summary of those deals. And what we're saying, it's a year of two halves. First half consolidation, knocking in the ship, and second half delivering the deals. But the beauty about it, when we sign the deals such as yesterday's, it was a large German vaccine company, well, kind of Scandinavian German. They paid us a third up front. And we've got it delivered and it'll be all finished. And we said by the end of Q1, maybe earlier. So they're about 5-6 months start to finish. They're very cash generative. They don't take years to deliver. Challenge studies, that's why they're so attractive, the vaccine companies, start to finish 3 to 6 months.
Okay. Okay, there's lots of questions. What should my last question be, I wonder? Okay, here we go. If you haven't sold the company, where do you see the share price in 2 years' time, please?
Well, I think the simple example, and Donald, we're trying to say we don't want people, look, there's been a COVID bubble. Some companies up 5x. Cal, what did you do wrong? You've only doubled or tripled the share price. We IPO'd at 5.7p. We're about, was it 17, 18p? That's a 3x. That's not bad. But we're trying to guide the market. We want people to be careful and never be afraid to take profits, I would say. Look, we're guiding. If we can raise the share price 50%, we're in a fast growing market. That's not bad. I double it every 12 months. So the answer, the question is, if we can double it in the next 12 months, that's pretty good going. And that's probably not that hard. We avoid talking about the sell option. We have a lot of staff who wouldn't like to hear that. And I think the halfway house, if we keep pushing the share price, if we deliver the results, I believe the share price will follow, which means 50% every 6 months, doubling every 12 months, keeping good liquidity. It's not Hotel California. You check in, you buy the shares like a lot of AIM companies, you can't get out. We're keeping decent liquidity. People can take their profits. But we're encouraging people to stay with us for the ride. We'll engage fully, let them know where we're going, and try and avoid any surprises. That's what we're trying to do.
Well, you're doing pretty well in terms of getting people to stay with you for the ride. You've got 479 participants watching you at the moment, Cathal. So on that happy note, we'd like to say thank you for joining us from Dublin, and have a good evening.
Donald, thank you very much. But I think they're probably all here to watch the next two. I'm a shareholder in both of the next two companies. So I think we've got to share that love with our other two ones, because they're two fascinating companies coming up as well. Thank you very much.
I hope you're following both those companies on London Southeast, Cathal.
Absolutely. Where else? Nowhere else.
Good man.